ask that question again. Just
True.
um, let me just send the link out as well. Um, okay, you should probably open Twitter. How does the mic sound though? This is the first time I'm actually testing it.
Oh, it sounds great, man. You sound like you Eusebius McTrader.
I should be on radio, don't you think?
Yo, dude, like if they could open a segment for investors on radio, that particular radio show would blow up, man.
There is one though, for 702. Um, I think it's Bruce Whitfield. Um,
Yeah, yeah, I do listen to that, but it's not really per se
it's not
technical.
for our
It's just
level.
always, yeah, it's always those kind of old men kind of investing where they want to buy a yacht or take a child to UCT.
Yeah. Okay.
We are live.
Okay. So I've sent. Oh, are you actually watching my screen?
Yeah, I can see a screen.
Okay. So I've sent out the link. Um, hopefully people will join. Okay. So just because I didn't actually capture your question, you can just ask again, and then oh, actually, yeah. Sorry, if you're watching on YouTube, can you actually hear the speakers' voices?
I will I will just turn up the volume and then check in again. Then I will let you know.
Okay. I just want to make sure that there's no double capturing of the voice for the listeners on YouTube.
There is a voice for the speaker. I can hear myself actually.
Oh, okay, then perfect. That's perfect then. Okay. Venda, your question.
Oh yeah, so I was asking based on technical analysis combined with actual fundamentals on the particular stock. So, like on forex, for you to use some certain indicators, you would know that okay, because this is traded every day, people are buying from that country or trading their dollars for euros or what's or not. Price action is quite more guaranteed in a smaller time frame kind of thing. But then in a stock it's quite different. Then how do you then determine movements based on technical analysis on a particular stock, like a slow moving, like maybe your MTI and your Discovery type of stocks? What kind of strategies or what kind of things do you look into to say, no, maybe I should do a buy in here, hold it for so long because I know it will definitely move based on certain news or lack of news thereof, kind of thing.
Okay. So I would assume that the stocks you're talking about are basically those low volume stocks, meaning they're not traded a lot. And a very common example for most people would be Purple Group, which doesn't have as much volumes as the other big companies. Funny enough, the low volume ones are quite could be very easy to predict because their pattern is very linear. So like for example, Purple Group, we knew that every time it hits 80 cents, it's going to jump back up. and it did that for a number of months. So it's easy to make bets on those because um, the people that are trading those stocks, the low volume of people that are trading those stocks, have a general consensus of what the price of the stock should be and what you would be willing to pay for it. So, for example, if we use Purple Group again as an example now, where it's, as you can see on the screen, there's PPE there. Let me just minimize this. It's going to be on the side here. It's 127. And it's a low volume stock. So you know that if it goes to 80 cents, it's a definite buy because the consensus of the low volume of traders have reached 127. If it by some chance it goes to 80 cents, you know the potential, you'll definitely buy into it. So those ones are easy to predict. The patterns are very simple and they're very easy to read. So what if you have another low volume stock that barely moves? And a typical example I can think of is Aveng, I think, the one that's at 3 cents and 2 cents, and it keeps that price for a very long period of time. So there you can also tell the movements of the stocks. How often does it actually jump up? What is your return if it does go up 1 cent? Is it at a peak? That will be very easy to tell. I mean, if Aveng is at 4 cents and in the previous years it's only been around 1 cent, 2 cents, 3 cents, and then 4 cents, then it's a peak. And you can then make your buying decision based on your risk appetite, whether you think it's a good time to buy in or not. And yeah, so the low volume stocks are I think they're much more easier to predict than the high volume stocks that always move up and down. I think the stock on the JSE which is traded the most is what's this? It's the big company. They just sold their shares in Tencent.
Naspers.
Naspers, yes.
Naspers.
Naspers. So their volumes are like ridiculous, and you can actually check these volumes on MoneyWeb. I forgot what you search. JSE results. So if you just search JSE results and you go to the MoneyWeb link, it gives you the trades. So you see here, the guys on Telegram actually won't be able to see my screen, but there's a tab which says top 10 value and volume. And day in, day out, Naspers is always at the top. So it's always the highest traded by volume. So the ones that don't appear here, like the Purple Group, which will only appear if there's some sort of excitement, you can find them listed there. But this is only the top 10, and you can view all if you do want. But yeah, so your companies like Naspers, which are heavily traded, they would move a lot more like your Forex because you don't know where it's going to go, and the news will be a very good friend for you in terms of making an investment decision on them. But for the low volume stocks, you barely don't need the news. You can just buy in, and chances of them making good money for you are higher than the high volume stocks, depending on what your hold term is. I hope I've broadly answered your question.
Yes, pretty much. Thank you very much.
Okay. Are there any questions before we start analyzing? Okay. I guess not. So let's have a look at. I remember I sent a. What did I send? I sent something, and I did get quite a few requests. So here's Keleto. There is a Keleto. So it's someone completely different. So we're looking at Renigen. I don't remember if I did Renigen before. So, fun fact about Renogen, I had the opportunity to invest in them. Um, was it last year? I think it was last year towards the end. Um, but I decided not to because I did a whole change on my portfolio. But I did watch they had a webinar. I think it was sponsored by Easy Equities, and I was actually quite impressed with their pitch. So they seemed like a good buy. I think this was when I saw them last year around October, September, October. And their business was actually very quite compelling the way they introduced it and presented it to the listeners. And basically, they have a really good supply of this gas. What is it called? Is it?
Natural.
Yeah, but it's a specific one. Helium.
Oh yeah.
It's helium, right?
Oh yes.
Yes.
Yeah.
So
Yeah.
they've got a really good supply of helium. So just some fun fact. So basically, what the CEO told us was helium has to be of a certain purity to be worth something. And then when they found this deposit of gas, they took a sample and they went to get it tested to find how pure the gas actually is in terms of the helium content or something like that. And I think there was a certain limit. I can't remember what that limit was for it to actually be worth something. I think, it's these sciencey numbers. But when they did get the gas tested, the results were showing that it's basically worthless. And obviously, you can understand from their side, they were quite disappointed. But then I think they got a second opinion or something like that with more advanced equipment. And it turns out that the gas they found was so pure that normal measuring apparatuses couldn't actually give out the accurate figure. So it was giving them a false positive. So that is actually the benefit of this company. And when I heard that story, I was actually inspired to go in. It's actually still on my watch list on Easy Equities. But yeah. And they actually bought that property for quite a discount because the previous owner actually didn't know what was under there. But anyway, I haven't really looked at Renogen. So,
Yeah.
Venda, just to go back to your question of low volumes. Okay, I know you can't see the screen right now, but you can actually tell
Yeah. Okay.
when a stock is low volume by the way the graph is printed out. There's
Okay.
a lot of stagnant movement and a lot of jumps here and there. So according to what I see, from way back when until around December 2019, there was really very small trading volumes on the stock. And I think the excitement only happened around December 2019, where the graph is showing a lot more movements in terms of the trading volumes. So I'm not sure what actually happened to Renogen because I can see that from the 30th of March, it has been going down. So we'll just do a quick search because I haven't really been paying attention to this.
Yeah.
And let's
So
just,
prior to that, it was actually up 124%.
yes.
So this was and then that was also after those news that you spoke about, the purification the richest helium concentration gas.
Yes.
So, however, their financials were not really looking so good and whatnot. So the pump was really because of that. But last year they actually did take a loan of like 216 million rands. But so most of it because of the equipment they needed for construction and whatnot. Yeah, so I think maybe now it's just because they are spending most on stuff that they need to do before they can start turning a profit. So maybe investors are kind of like wary amongst that, or we have people taking profit from January because the price started shooting up from January onwards.
Yeah.
So maybe it's just
Okay. So I do see there's an article here from IOL. I'll just send this link into the chat where it seems like there was actually some positive news. Wait, is this the right one actually? Oh yes. Renogen shares. Oh, this is actually from a week ago. Okay, so it's actually quite old news. But it seems like they have started bringing in some sales in terms of the helium. So I'll just send that. So I do notice that my current chart is actually on a day chart, so it's actually quite zoomed out. So we should probably have a closer look at what happened within this month, and then we can possibly have a prediction of what we can expect. But I think if it is a long-term play that one wants to make with this company, if they're not invested in it already, it is currently at a dip. So it is a good time to possibly partially buy in, not to go in full capital. Yeah, so it's actually from Feb. Oh yes, towards the end of January, that's when they saw a surge in the share price. But then from March, we've been going down. So the next support line that I can actually see is around 23 Rand. So I'll just mark that. Okay, so for people who might be wondering why I'm saying the next support is 23 Rand, is because I can see that on this section here, there was a bit of resistance around that price. So we'll just zoom in. So we can see that there's these 4, 5, 6 pins, 7, 8 pins basically bouncing around this 23 Rand price. So as we can see where the price was surging up towards 23, it was actually a resistance first, and it managed to basically sneak past, and it went back down below 23 Rand. And then it tried it again, and then it finally managed to break. And once it broke successfully, the 23 Rand stopped being a resistance and it became a support line, basically holding this share price above that price range. And that support line held successfully, and the share price continued to surge, peaking at 31 Rand. So since it peaked at around that price, I do see that it did peak above that, but I'd rather play it safe and keep 31 as the next resistance. So when it reached 31, it actually started going back down towards 23. So in terms of zonal, this is actually, I would consider this a good zone to buy in around this price, for anyone who is interested in getting into this share. And I'll just note that this is basically based on the previous resistance around the 23 price. So it does seem like a good chance to buy in. if we do have a successful um, a successful support line bounce, then we can expect the share price to go back up. How high? Around 26. And why we're noting 26 is because, again, on the 26th of March, there was a major resistance around the 26, and then it managed to break that. And then when the share price came back down, it had a bit of support at 26, and it had that support once, twice. It broke, and then that support became resistance. So I think it's practical to see that as the next major support or resistance line if the share price does manage to actually go back up. So I'll just do a quick calculation to actually see in terms of returns, if you do want to take a bet on that, what you can expect.
Yo, Tez, sorry to interrupt.
No problem.
I think your YouTube stream, the volume is a bit low.
Is it low?
You might want to check something in there, yeah.
Okay. Are there comments? Oh, okay. I actually see the comments here. Noko. Can you hear me now? Noko, just send a message if the sound is better. Okay, I think it is better. Or can someone just have a quick listen to see if my voice sounds a lot better?
Okay, I'm actually also streaming on YouTube as well. So
Yeah, we're good. Yeah, it's fine.
Okay, it's better than before.
Yeah, better.
Okay.
Yeah, it's good.
Okay, cool. So I'll just continue, or I'll just start over from the 26 or the next 26 resistance line. So as I stated, we are noting this as the next major resistance if the share price goes back up, because we saw there was a bit of resistance there. The share price broke, and then when it came back down, it still had a bit of a struggle around the 26 Rand mark. So it had that struggle once, twice, it broke, and that support line then became a resistance. And then the share price went back down to around 23. So if it does come up, it's only fair to expect a resistance at the 26 Rand mark again. So if we just calculate what that would mean if you buy in now and aiming for the 26 resistance. So that's 26 minus 23.45 divided by 23.45. So that's around 10.8% if you do plan to jump off at this mark, although I do really consider this to be a good long-term trade. However, if it does, let's say if you want to aim for the higher resistance, there are a lot other minor ones like 27. If you can see 27, this is a very obvious resistance because you can see all of these interactions with this line. But I'm going to ignore that because, I mean, if you're aiming for 26 and you want to aim above that, might as well go for the higher number, which is 31, the price to beat. So if you buy in now and you're aiming for 31, that would be 32%. So it's actually a very decent opportunity to buy in if you are interested in Renergen. 32% to 31. The chances of them getting that, I believe it's quite high, especially because they finally made their first sale of their gas, and long-term things are looking good. We'd like to see how they obviously perform the rest of the year. But I do feel that this would be a nice way to diversify your funds if you haven't already invested in Renigen. Let me check if there's any questions on YouTube. Is there any questions on Telegram? Voice.
Yeah, so knowing economical political issues like what's happening in Mozambique with the natural gas and whatnot, do you believe that helium might also, with your opinion, right? Do you believe that helium might suffer the same, that might maybe impact the share price as people, as war starts, where they want to seize this gas from Renigen, or it's exempt, it's not like natural gas and then?
My understanding was that their gas deposits was in South Africa. Just correct me if I'm wrong.
Oh yeah, no, I do agree. I'm just saying it won't be the same case with the natural gas in Mozambique or not, you know.
I'll be honest, I'm not sure what kind of gas they do have in Mozambique. But my understanding is that with when it comes to helium, it's actually a internationally sourced resource. So I don't think the conflicts in Mozambique would actually really interfere that much with Renigen's operations unless they have a direct interest in Mozambique, of which I doubt. So I don't think their conflicts would actually have an impact on it. But I mean, we are here. I'll just do a quick random search of Renigen and Mozambique and see if anything does actually come up that we should be worried about. Yeah, there isn't really, there really isn't anything that's going to impact them from Mozambique, from what I see.
Okay, then great. That means we need more people to get pregnant so that there can be baby showers from helium for balloons.
But let's see how. Okay, so let's actually see how it performed today. I'll have to go to a 5-minute chart just to see. What's the date today? Today is the 23rd. So it actually did very well today, by the looks of it. So my calculations are actually wrong because I was calculating at so it is actually here. It's at 23.45. So it had quite a rally and then it came back down. But yeah, I do see this as a really good buying opportunity. And by that, I don't mean put your whole investment in there. I always emphasize partial buys where you put a portion. And if it continues going down, you basically average out your purchase price. And if it goes up, it's a win-win situation for you anyway, and at least you're making some returns. But seeing the trajectory of how the graph went down, what I actually like to do is draw a symmetrical line, which basically mirrors the way the graph dropped. And then I can have at least a time estimate of when we can expect the price to reach 31. And this is just an estimate. It does get accurate sometimes, but sometimes it's not. So please don't use this as... so around May the 7th, hopefully, if everything goes well, by May the 7th, we could see the price rise. But it's not really that symmetrical. I think I'm being too optimistic. That's
well, I'm with you there because I actually bought some today.
Yeah, no, it's a good buy. I won't lie. It looks like a very good buy. And then let's also just take note of the uptrend support line, because despite this dip, it seems like it could be at a turnaround point. So I'll just draw an uptrend from here to there. Okay, so I can't ignore those lines there. So if we're being realistic, we could say that it actually broke through the uptrend support line, because this is where we saw most of the reflections. Yeah, so we could consider that it has broken through the uptrend support line, which means there is a chance that the graph will continue going down, but we'll have to see what happens at around the 23 Rand price range, if it will actually rebound or continue going down. But for now, as I said, I do feel like it is a safe partial buy-in. Let me just check if there's any questions on YouTube as well. Okay. Okay, so it seems like the thing went well. Okay, I do see there's a request for Cartrack here. Okay, is there any more questions on Telegram with regards to this specific one? Can we move on? Okay. Cartrack is actually a very exciting one. I've been seeing all the news about Karoo actually listing, and I see there was a big frenzy on Cartrack shares. Let me just see what's in the Telegram feed. Okay. RMH. Okay, so we'll close this. Okay. I'm surprised no one asked for an analysis on PPC.
Nah, I'm only doing construction in 2022, so I'm okay.
Okay. Is this the right one? Yes, RMH. I'm not sure if this is the one they actually wanted. Because this always confuses me. RMB and then there's RMH. Okay. Okay.
RMB, is this FNB's owner or what?
Or previous owner or something like that. I think it's the one that had the split. Was it last year?
Oh, okay.
Yeah, I think it was last year, July, where it had that massive dip, and everyone was buying in. Yeah.
Oh, I heard you saying Karoo, so I thought you were going Karoo.
I will go to Karoo. I saw there was a request on YouTube to check out Cartrack, now known as Karoo.
Okay.
So yeah, let me just actually see. So I think let me do RMH. Let me just see what else is on Telegram, and then I can see what I can do after that, and then I'll hit Karoo. Okay, there's 3D systems. I think we can do. Let's do JSE first, and then so after RMH we'll look at Karoo, and then we'll finish off the JSE stocks, and then we can move on to the US stocks if there is any request from people. Okay, so let's start this one from November. Okay, so from November, what I'm actually noticing, so let me actually zoom out so you guys can actually see my thinking process. So it had a downtrend from July until around October. And how we see this as a downtrend is because the share is mostly going down. And then that's changed around this period of time where the share price was going up. So we are now considering this as an uptrend. So what I usually do is I try and mark the points to draw my uptrend support line. And so we'll start there and we'll bring it here. So when I draw my uptrend support line, I basically mark it with the points of the graph. So what this basically does, it gives me a view of the worst case scenario of the actual share price. So in this case, when should someone start worrying? Let me just expand this line actually. So I would start worrying if the share price goes down and lands somewhere there, because then as you can see, it's going to have another touch there, and that's where you should then either hold or try and sell depending on what your investment strategy is. But if it does break this line, we would basically consider this now becoming a downtrend formation in terms of the share price movement. But for as long as this share price is far away from this uptrend support line, we can be well rested in terms of fear. Hold on, I see there's a message on Telegram.
Oh no, dude, it's me.
Oh,
What's up, everyone? Yeah, because I just saw your message now, and like I literally only saw it now.
oh, no problem. Welcome to
Cool.
the chat.
Sorry, what are you guys discussing in this chat?
We're just doing analysis, and then we're going to be doing questions after that. It is streaming on YouTube as well for the people on Twitter who don't have Telegram. But you are more than welcome to join if you do want to.
Oh, okay, cool. So how do I get that link to the YouTube link? Do I just go on your Twitter?
Yeah, so just go on Twitter. It's the very last tweet I sent out.
Okay, cool. I'll catch it now. Thanks.
Okay, no problem. Okay, so basically this would be the worst case scenario for RMB, but it's not looking like that right now. And what we can also notice with RMB is how the price movements look. So this is also one of those low volume stocks. So if you guys don't know what I mean by that, I'll just give you a typical example and a comparison so you can see how a low volume stock looks compared to a high volume stock. And we're going to look at Naspers, which is the only one I'm confident about. As you can see, I did some heavy analysis on this. Okay. So that's that. And then this is RMB. So you can see a lot more dots and charts as compared to this one where they're thicker and more still. So like you can see these price movements here, very predictable, a lot of consensus amongst the traders as compared to this where it's always fluctuating. So that's basically one way you can tell if something is low volume or high volume by how the price moves. If there's a lot of consensus and a lot of non-price movements like these here, so it's generally a very low volume. So what this basically means, just a basic candlestick tutorial. So each candlestick is 45 minutes. So basically in 45 minutes, that's what the movement was. And that's how you can basically tell the volume of a trade. Or if you don't want to actually look at the volume of the trade by using the charts, you can always just go to MoneyWeb and the volumes are provided there and you can tell there. But anyway, let's go back to analyzing the stock. I'm not sure in terms of news, because my biggest worry about RMH was that when they split, one of the biggest units, business units left. So there was a big question around how will they stay alive, and which was one of the biggest motivations of the share price actually going down. What happened here was just an anomaly, because people actually thought it was a good dip to buy in, and it drove the share price up. And when the realization came in, everything went back to normal. But generally, it is looking healthy in this lifespan. We're hoping for this dip to not happen, although it is happening right now. But you can have some confidence because worse has happened, as you can see here. So chances are, if you are invested in this, I might want to hold until the 156 price point, and then reconsider my investments if you are in it for the short term. If you are in it for the long term, if it does break this uptrend support, then you might want to start worrying and reconsidering. But chances are it won't. There is a very good support line at 180, as you can see here. I'll just draw that line there. Blip. So what could be good is if we do have a bit of a retrace at this point. So anyway in between this, if we have a retrace, then it should be good. If we do break this, you might want to keep watch, and then if it breaks this support line here, then yeah, have a really good look at it. Any questions?
Sorry, I got a question.
Oh, Fred, you're here. I thought you left.
Sorry, I got a question. No, I'm here, bro. Yeah, so my question is, I see that you're looking at it on a 45.
Can you just put your TV on mute? Because I'm having double feedback on my side.
Okay, yeah, just sorry about that.
Yeah.
So I noticed that you're looking at it on a 45 time frame.
Minute, yes.
45 minutes, yeah. Do you mind maybe doing an analysis on a 1 day?
1 day, okay.
Because yeah, I tend to, for me, looking at things from a 1 day gives me a better picture.
Okay, so this was the furthest I could go on TradingView. But I did at the start of the analysis, I actually did go this far back, and I did note, as you can see, this green line there. So I did note that from July or June, we were actually in a downtrend, and that pattern changed around this point, and it's been on an uptrend ever since then. And that is around October, November. So this is around October, and right now we're here. So it has been on an uptrend since then, which you can see it's a trend. A clear trend change happened.
Okay, cool.
Okay. Let me just check if there are any written questions here. Any questions from the voice? Okay, let me just sift through this to see if there are any. Okay, there's City Lodge request, PPC. Oh, the PPC request actually came through, guys, from Dini.
Yeah, so Tez, one of these splits, right? The only thing that worries me mostly is why did they split? And same thing went for Investec when they split because of their property business was, or the other rather, the asset business was making more money, and the rest of the bank was dragging it down, and they had to split, and now it's sitting at like $30 or something like that from $90 in 2018, right? So it's just a matter of, even for RMB, what made them split, and then is it politics inside the different holdings? Is it something that now they're saying everybody's on their own and they are different brands now? That's the kind of thing that would actually make me worry about the share price itself, because well, investor confidence also comes from politics inside the company. Yeah.
Yeah. So generally, when a company decides to split, it's mostly, or they let us believe that it's mostly a strategic business approach where they're trying to go for different markets, and maybe the relationship that they had is not working anymore. But it's purely for strategic business purposes. I doubt it has anything to do with politics, because remember, as shareholders, you actually have a say in whether the split should happen or not, in those votes and stuff. And if a split does happen, in terms of accounting equity, it's not supposed to affect you in any way. Because obviously, if the split does happen, the share price will drop, but then you will be compensated in the other company's shares, basically leaving you break even. The unfortunate part is that you do have anomalies sometimes where a share price will be driven up. But in terms of fundamental calculation, in terms of your asset holdings, there should still be square and balance out. So, for example, I'll just use a very rough example. When Old Mutual had Nedbank, let's say the share was 10 Rand, with Nedbank contributing 2 Rand to the share, and Old Mutual contributing 8 Rand to the share. And together it made it 10 Rand a share. And then the split happens, right? Generally, if you're a Old Mutual shareholder, it means since the asset has been removed from the company, your share would be worth 8 Rand. And then you've lost the 2 Rand. So to compensate you for that, they'll give you 2 Rand's worth of shares from Nedbank. And then overall in your books, you're still squared off.
Awesome. I hear you. Thanks.
Okay. So let's move to the next one. Should we do Karoo? I don't know how many O's Karoo has, because I'm searching Karoo and I'm getting a desert.
Yeah, it's 5 O's. 5 O's.
Not 15.
Yeah, good one.
Okay, let's see if it is here. Okay. So in terms of this Karoo thingy, I actually had this. I had Cartrack on my watch list from early last year. I don't know if I'll still be able to find Cartrack actually. Let's start there. Not anymore, unfortunately.
Nope, delisted.
Okay. Okay, I think I know where I can actually find it. I'll just check my previous analysis, because I think I did do an analysis on Cartrack. There we go. So this was Cartrack basically, right? And you can see this rise they had. And the surprising thing about Cartrack is that not a lot of people paid attention to it. I don't know why. It was actually very surprising for me as well when it hit my radar, and I actually looked at the graph, and then I actually read about what was happening and um, them planning to list on the New York Stock Exchange. I think there is an earlier analysis I did of them, but I might have to go quite far to find it. But I'm sure we have time. Let's see.
Your account looks hackable, man.
It's not.
Man.
It is not. Trust me. Is anyone invested in EOH?
Nope. I actually exited prior to those corruption news because I was like, the share price was just tunneling. I think it was in 2017 or something. I was like, nope, not going here.
Oh, okay. Okay, so that was the only card track analysis I had actually. But yeah, we'll just use that then for reference purposes. So I took note of them around, where was it? I think it was around October actually, where I started to notice, and I put them on my watch list. And yeah, and then I got disinterested when I saw this very horizontal trend that they had, and I thought the excitement has died down. And again, this was around the period that I started, which was October, which I started actually re-looking my portfolio and how many JSE stocks I actually have in there. So unfortunately for me, Cartrack didn't make the cut, although I did see the potential it had, especially with the excitement around them listing on the New York Stock Exchange. So basically, they have a lot of exposure in terms of the African continent, in terms of their tracking services and all that, and that's where most of their revenue comes from. It's not just polo drivers buying new cars that's driving the share price up. If that's what you thought was the cause. But yeah, let's actually see. I'm not sure if you guys know if it did make an IPO on New York Stock Exchange yet. Let's have a look.
I don't know. Which one was that was showing up when you were typing in Cartrack there?
So that was the old Cartrack before they delisted. But there is 2 Karoo's now.
Yeah, I think that's it. Yeah.
Okay.
Because they did actually kill the South African Cartrack, right?
Yeah. So, first thing we can notice from the New York Stock Exchange is low trade volumes. You can see all of these gaps. Yeah. It started at $28 and it's now at $37. So if you bought in at IPO, let's have a look. That would have been 27% if you bought in at IPO and you held now. So in terms of Karoo USD, first thing we can notice is that it's basically reached a resistance line. And don't get confused, it is actually active right now because the US market opens at 3:30 and closes at is it 11 or 10:30? I think it's 10 o'clock actually. So it is still active, but it has reached a resistance right there. Oops, wrong one.
Yeah, it is 10 p.m.
It's 10 p.m. Okay, thanks, Fred. I always get confused with their daylight savings changes, and you always have to keep up. Okay, so there is a resistance on their side. Is it investable? Let's have a look. I'm just quickly checking on Easy Equities. I'm not going to check on my browser because I don't want you guys to see how much money I have. Guys, is Easy Equities down right now? Or is it just me?
Probably. Fridays they do deployments.
Oh my goodness.
I always tell that guy that he needs to invest in high availability using different pods or Kubernetes clusters at least, but he doesn't listen. He just wants. It's because it's written in .NET. That's the problem.
Tell him to get fiber.
It's not down, it's up, guys.
Okay, I'm in, guys. I'm in. Just a bit of banter. Let's see. Okay, so unsurprisingly, Karoo is not listed in terms of USD, and it's probably because of the market cap. Because remember, Easy Equities provider from the US sides needs a market cap of at least $2 billion for them to be made available. So looking at the low trade volumes, I'd probably have to divide that by the number of shares that were issued, but I really doubt they have matched that market cap. Let's just have a look quickly at the technicals here, actually. It's at 797 million market cap. So if you guys want this to be listed on Easy Equities, you have to pump the stock up. But the other technicals is that it is at a strong buy. But unfortunately, you can't buy it yet. Let me just have a look on eToro as well, if it is available there. And also have a look at TradingView. If someone does use TradingView, can you please check for me if Karoo is available?
Which Karoo?
USD.
Are you checking TradingView or eToro?
I'm checking on eToro, and I need someone to check on Trading 212 actually. So Trading 212 is the trading platform, and it has a lot of small caps.
Nah, I don't have that. What is it?
Trading 212.
First time I even hear about it. Huh?
Okay, so it's not on eToro. So basically, you can't invest on the US one. I'll just have a look at Trading 212 as well to see if it is available there.
They do have it on Trading 212.
Oh, they do. Okay. Who was that? Sorry, I couldn't see who spoke.
Nondi.
Oh, Nandi. Thanks for checking.
Nondi.
Do you have a Trading 212 account? Or are you also on the waiting list? Like
I
all of
do.
us?
I do have.
Oh, okay. I'm still on the waiting list. Are you going to invest in Karoo?
No, I'm not invested, but I do have Trading 212, and it's there. The company is there.
Okay. Yeah, it is there. And it did 8% today. So that's something to consider, guys. But let's look at the... Oh, thanks, Nandi. Really appreciate that. Let's have a look at our version. I'm assuming that the people that were invested in Cartrack most probably got shifted over to Karoo. Because it wouldn't make sense to ask people to sell their stock. just to buy in again?
Yeah, no, I stayed invested, so I was up 174% on Cartrack. Now I'm up 27.16% on Karoo, but it's still pretty much the same, really, because the value is the same.
Okay, good. Okay, so it has a market cap of 10.39 billion. I don't think this graph is right, actually. Okay. So it got listed when? The 21st of April. So it was a few days ago. Let's just search for some Karoo news. Because I did see some positive news in terms of the share price. I actually noticed that the company I work for bought a few cars, and they are planning to install Cartrack. So if you guys are still having doubts, okay. So let's actually have a look at the share price, how it's moved. Okay, so I'm not going to consider this one. This might be an error. I'm not sure. So I'll consider the share price from here. So, okay, there's not much we can actually see right now. For the people that requested a Karoo analysis, there isn't really much information for us to do anything about. So we'd actually have to wait it out, maybe over a month, because it just got listed a few days ago. So let's just wait for them until the 22nd of May, and then maybe we can just have a quick view of what the share price is moving like overall. Because here it still looks very horizontal, and we can't really make out any information from this. And unfortunately, Cartrack is not available anymore. I only have the old chart, so we won't be able to do any analysis on this. But if there was any lucky person who actually managed to buy at that point, of which I doubt, the returns they would have made on this. Imagine buying from there at 61 and your share price is all of a sudden worth 550. So I think this was just the listing part, and it's just a bit of an error, and we should actually consider it from here.
Yeah, nobody could buy actually because all trading was closed on these instruments. So it's just a matter of up until they manage to move over all assets and everything. That's when those spikes happened and stuff. But then essentially they still have more of people who were still invested and some that sold after there maybe to see if they can get some gains. But then it will make sense really to have bought this when it was busy relisting.
Okay. Do you have any idea what time it actually got listed on the JSE? Was it at 9 o'clock sharp?
Oh no, I was not following exactly that. I was just seeing what happened 2 days ago or something. Or I was just looking at it at Easy Equities, and it what is this? Cartrack just became on zero. My portfolio went boom because of then I relaxed. I saw somebody tweet about it and say, what's happening there? Then Karoo came without a logo and it was just back up now. My portfolio was okay. And then today it had a logo. So it keeps seems like they're busy there.
I bet you had a bit of a heart attack there.
No, I'm quite chill, hey.
Okay, so we can't actually do an analysis on Karoo yet. The JSE version at least. But as for the US one, at least we have some time because they got listed when? On the 1st of April. So still the same. The problem I have with multiple listings, though, and it's something I actually hate, especially when it comes to JSE versus New York Stock Exchange, is that on the JSE, your South African version will be doing so well until the US markets open and they just come and shit on your parade, basically. And I saw this a lot last year, especially with Sasol. Sasol would do like 20% in a single day, and then the US market opens and it's down 30%. Ridiculous. So I'm hoping that that doesn't happen with Karoo. It might, but let's hope it doesn't. But anyway, let's move on to the next one. Let me just make sure there's no questions in YouTube. Okay, is there any questions regarding Karoo before I continue? Or any questions at all, actually? Might as well just throw in everything.
It is.
Yes.
What's happening with Sibanye?
Sibanye. Oh, your favorite child, your golden child.
My golden child.
Are you still in?
I've been in with Sibanye when there was 7 rand. So yes, I'm still in. A lot of people won't remember the 7 rand place, but yes, I was there once.
Okay, let's have a look at Sibanye. I mean, yeah, if you got in that early, yeah.
Yeah, I know. Every purchase now takes my average price up. So yeah, it's not. You know, when you dip your toes and you think I'm only going to buy 1,000, and then it's like, oh shit, I should have bought much more.
Yeah. Okay. I mean, I'm just looking at the basic chart, and it's still looking very, very healthy overall. In terms of if we just cancel out the noise. So I'll just go out to the 1 day. Oh, let me just go out to the 1 day chart. And you know that's why I actually stay away from mining stocks, is just the fluctuation. And I actually think I'm cursed. I'll tell you why. When I was a financial advisor, so I had actually access to all the portfolios. I could view all of my company's various investment portfolios, and I was looking for the best one to invest in. And at that time, this was around 2015, my company's best portfolios were South African Property Fund. I forgot what it was actually called. And then the next one was the Global Equity Fund, which undoubtedly would do well. And then I had a look at their mining funds, and they were all just like, minus 50% down. And I just asked myself, who would invest in something like this? Why does something like this even exist? And I think from then, I just stayed away from anything that has to do with mines. But yeah.
Yeah,
So,
I think a lot of people get caught by the current prices and don't look at the metrics surrounding, those minerals.
yeah.
So yeah, I know Neil Froneman always talks of, he's got like a 2, 3, 4, 5 year view of what's going to happen in the market with regards platinum prices or palladium prices,
Yeah.
and with the shortage of those metals. So that's the view that one is to take. These are not trading stocks. I know that you like trade in and out, but these are much more like your retirement stocks. Fred, I know that you mentioned somewhere that you look at 10-year stocks. Maybe this is something you want to have a look at, because I think they're going to do some good things in the battery metal space, etc. At least that's where they're aiming to go. They've bought a small stake in a company in, I think it's Finland. So yeah, they're obviously trying to diversify. So yeah, that's my reasons for staying long with Sibanye.
Yeah. And I'm actually looking at this chart. It was actually around, I think this happened later. Okay. But I do see, did you get in around 2015? at the
Yeah. Yeah.
7
In
rand.
fact, I think mine was 2016, and then when it went down to that 7 rand 780s mark, I
Yeah.
went in big then. Yeah, and just held it, and you just didn't know what you were doing. Well, at least
Yeah, yeah.
but you held on and you just bought the dream, as
Yeah.
Neil was selling in, and he's still selling now.
Okay.
So yeah.
Okay, but yeah, overall, it is looking good. So I'm gonna start this from 2019 because I see that's when the previous dip was, or actually 2018.
Yeah.
They were down to 6 rand 46.
Yeah.
Around this was 23 July 2018. Okay, but
Jeez.
from there.
Yep.
From there, it's been just a really good run for Sibanye. So if I just do a quick calculation, and what's actually really good about the stock is, when you compare to other stocks, because now COVID is the COVID dip is a very good pin to actually see how companies were performing, And before COVID, they were up on a rally, which is actually a very good sign. Where you look at
Correct.
other companies such as PPC, although it is a completely different industry, or what's the City Lodge, they were already on a down trend before COVID
Downward,
even hit.
yes.
So something like this, I think, for people who actually didn't get invested then, if they did actually have a look at how it actually performed before COVID and see the price at such a massive dip at 14 Rand 41, it could have been a very good investment at that point as well, seeing that the rally it was on. But anyway, from there, 6 Rand 46 to now at 69 Rand, that's almost 1,000%. I don't even have to type that in a calculator. It's actually very good returns. I don't see any slowing down. Let me just go see how far I can go back to see what the highest peak was before the 69 Rand share price. Okay, the furthest I can actually go on TradingView is 2014. I don't know if they only listed in.
I think it might be somewhere in the 70s. I don't think they ever breached 75. I don't think they ever breached that.
Yeah. So we are in uncharted territory.
Yeah.
Basically. But
yeah,
so for me, please don't take this as financial advice of any form. But for me, what I generally do is Fred would know this, is what you call a trail stop. So basically, the higher the share price goes, the higher my pull-out zone is. So that if the share price ever reaches that point, I know that, it's time to basically stand aside and see what's happening here. Especially when I've made very big returns on a particular stock. I always put that trail there. And considering as well that the mining industry is very high risk, not just in terms of returns, but even in terms of business operations, the massive strikes they have.
Yes.
And just an FYI, even when it comes to insurance, where mining companies, if they want to insure their property, it's a very big problem for insurance companies because they recognize the massive risk it carries. So you should always have that at the back of your mind when you're carrying a mining stock, that it could go bad very quick. I don't know if you are watching this on YouTube. I just want to show you something quickly. I'll just...
The trail stop you're referring to is stop loss, but you just obviously move it as price goes up.
Exactly, yes.
Okay.
So, yeah. So, Wilman, I'm not sure if you were watching this on YouTube. I just want to show you the graph.
No. I'm not on YouTube for this
Okay.
one.
Okay, so I'll just illustrate it, and then if you do have time,
And
you
then
can
I'll
just,
pick it later.
yeah.
Yeah.
So basically around 2015, right? The price was around 7 rand, right? And then they had a very massive rise to around 44 rand. So like from 7 to 44 rand, that's a massive rise. And then unfortunately, what happened is that the share price went back down, and around 2018, it went to that 6 rand that I mentioned. So like in your case, that could be something you'd want to consider as well. That after making such a massive growth, you don't want the share price to go back down to 7 rand in a few years, and then you have to wait for another few years to get back your 1000% returns. So I would consider a trail stop. Just mark it mentally that maybe around this point I should. It's my no-go zone, and I would probably want to step aside from this. Just that mental note, considering how high risk this particular stock and the particular industry is.
Cool. Thank you. I think those dips can be, charted against each time they went and bought something else.
Yeah.
It was Sibanye. When they bought Sibanye, then they had a high debt ratio. Then they bought Lonmin, and then the strike for 5 months. etc. So all of those always cause those dips. So very mindful of it.
Yeah.
But no risk, no reward, right?
Yeah, no risk, no Ferrari. That's what I say.
Yeah.
Yeah.
Thank you for that.
No problem. But I will comment that, you have withstood the noise a lot, especially for a stock this risky. Some of the dips they have are quite deep, and I probably would have pulled out a long time ago. I probably would have, and just seen my opportunity cost and put it in something that seems more safer and stable, like Apple or something. But I must commend that, you have actually cancelled out the noise, and you are reaping the rewards of that decision that you made. Okay.
Cool.
Okay, thanks a lot, Wilman. What else can we look? Is there any questions, guys? Let me check YouTube. Nothing on YouTube. Okay, so we'll move on. Let's see what else we can look at.
I think a gentleman named Kev asked for Kibo Mining.
Okay. Let me just find that. Why are people so invested in mining? Is there something I'm not seeing?
Yes, there is a lot that you're not seeing in mining. Opportunity.
You know what kind of mining I'll invest in? I'll invest in Bitcoin mining. If there is a company that I can invest in that's mining Bitcoin, I will put all my money in.
Bitcoin doesn't employ South Africa. So
exactly. There's no strikes,
There's no strike.
Yeah.
Efficiency of market.
There's Escom though. Remember, for mining, there's Escom.
Yes, actually. Okay. Did you ask for Kibo Energy? I don't see a Kibo Mining.
I think it may be the same. Kev, do you want to just jump in? I think it may be the same. I haven't seen it before, so I'm just Kibo, Kibo.
It's Kibo Energy.
It's Kibo Energy. Okay. Okay. So I do have it. Kev, are you watching on YouTube?
No, I think it's just.
Okay.
Yes, I'm also watching on YouTube.
Okay. Oh, okay. Okay, awesome. So, it's just the basic technicals. It is in the buy zone, or that's the market sentiment at least. And you can see all these straight lines on the on this basic chart, basically already telling you that this has low what you call trade volumes. In case you guys don't know, so basically low trade volumes, this actually has very low trade volumes. Low trade volumes will actually also affect the time that you're invested in a particular stock. If you're planning to just jump in and out, and it goes the wrong way, you might stay in that loss position for a very long time. So as you can see, Kibo Mining, this one, the lines are very linear, very predictable, and it is rising right now. So Kev, I do see that it has peaked at 26. I'll just have a step back actually to see the highest that they've been at. Oof, it's not looking too good. So around 2012, it seems like Kibo Mining Kibo Energy came from 7 Rand per share and is currently sitting at 17 cents. So I don't know, Kev, can you enlighten us why you'd want to find out about the stock? I'm just curious.
It's because I kind of saw an article about an energy deal in Mozambique from Durban to here. It's because yeah, then also the dual listing in London Stock Exchange.
Oh, okay.
So I was kind of confused if maybe with an analysis. I'm not sure. Okay, if I can ask, what do you think about the ISIS thing is gonna affect it? Yeah, that's kind of my major concern.
The ISIS? Did you say ISIS?
Yes.
ISIS as in the terrorists?
Yeah, in the Mozambique.
Oh, okay.
Yeah, thanks.
So, from what I can see, it hasn't really affected them much. If anything, it's actually added some positivity if this was linked to that. But we can see that from... Okay, so let's go to the COVID dip, which was when? June. Nothing actually happened to them. So, you see, before COVID even hit, they were on a downtrend. They went from 7 Rand and from last year or from 2020, they've been very horizontal until recent times. And this could be linked to the items that you just pointed out to us that has added a bit of excitement for investors, and they're probably trying to make a quick buck. People who bought in at 8 cents have easily made 100% on this if they are still holding, and if they did, or if they sold, they probably made around 300, 816, 24, around 350% returns. So I think there is excitement according to the deals that you just stated. I don't see them being affected by the ISIS issue, because the ISIS issue I think started when mid-March, and it hasn't really affected them. So I don't think it could be anything you would worry about at this point. I haven't heard any more news on that ISIS situation. I don't know if it's a lack of media coverage or if it has died down. But the stock price does seem more active than it was previously. So just be wary. If you are already invested and you bought at a good price, you might want to hold. But for a new investor, it still does seem quite high risk, unless they want to invest in this as if they're investing in cryptocurrency and make exponential growth. If you are planning to do that, just forget the money you've put in and see where it leads you. But a good buying position for this would be around, let's see, 5 cents, which was the peak bottom. So if it does ever reach that point, people might want to jump in. but just keeping in mind as well that this is a very low volume stock in terms of trade. So you might be locked in that position for a very long time. I'll just use this snip from, let's see, from 9th of Feb until the 24th of March. Let me just zoom in a bit. You can see how the price range was just jumping between 8 and 9 cent for a whole month, you know. So that's just something you should consider. If you are planning, obviously, to stay in this for very long, then you'll just cancel out the noise and see what the stock is doing 5 years from now. But let me not discount the potential it does have if things do go right for it. Let me just make a quick Google search to see.
Yeah, it looks like there was some good market sentiment in the last 2-3 weeks.
Yeah.
With regards to Skiba mining. So I see they're advancing on their Benga power project in Mozambique, etc., and they're shifting to renewables. So yeah, all of that obviously will have a
very big impact. Yeah. So yeah, I mean, was it Kev? Yeah, Kev. If you are in, I'd say just hold and see how it's gonna go. If you are planning to go in, please don't put your rent money there, because it might go bad, and you might need that money sooner than you think. But I mean, if you do have a certain budget for that fund, it seems like a lot of good news is coming through. There has been a bit of negative feedback on the share price, but we saw that with Sibanye as well. So it could be an industry movement. I'll just check another one, another mining company, just to see if it's an industry movement. Actually, let me just go to MoneyWeb, and they at least group everything. So let's just have a quick look if it's an industry movement. It doesn't seem like it is. But anyway, they do have, like we've said, they do have some positive feedback coming through to them, which is probably what activated the share price. So there is hope in the stock. How far it will go, I honestly don't know. Mostly because of the trade volumes, very hard to tell. And as you can see with these lines, I can't actually draw anything. There's just so much going on. But yeah, is there any particular question you have, Kev?
No, thank you.
Okay. Are you invested in this?
No, but I was planning into creating a position when it dipped.
Okay. Yeah, like I always say, don't go fully in, just buy in gradually, which is the safe way. But if you are feeling confident, by all means, then do what you feel needs to be done. You might be like Wilman a few years from now, just sitting on millions in the stock.
Yeah, thanks.
Okay. Let's check.
Thanks, Des. Really.
Let's see if there's anything else. Growth Point. Let's look at Growth Point. In 2015, when I was interested in stocks, the one that I was interested in the most was Growth Point. You could say it was my investing birth child. I was interested in Growth Point because I noticed how much properties they actually owned. and the company I used to work for at that time was actually renting from Growth Point. And then there's that 232 million rand per month they get from Discovery in rent. When I wanted to be a property investor, that's how much rent I wanted to receive. You can imagine the face of my potential tenants when I tried to rent out a 1-bedroom flat for 232 million per month.
Yeah, now it's just empty sitting there. Adrian Goy is regretting himself.
Okay, where is the stock? Oops, wrong one. Let's see. Okay, it's at a strong buy. I wonder why. Okay, so here's Growth Point. Wilman, if you're still there, this is exactly what I was talking about. So at this point, we had, when was it? Let's see. So this is when COVID hit, around March. And we can see that before we even hit COVID, it was at a downtrend. So that would have been very concerning. And this is from, I actually did an analysis this very recently. So from, let's see, the 14th of March 2018, we had a downtrend. But in that period, it was a very horizontal movement. If you invested, let's say you invested in 2012 and you decided to sell your stocks in 2019, you basically didn't make anything in interest. Your funds were just fluctuating. And if you didn't sell at that point, then you're worse off right now because it's way low and it's struggling to make a recovery. So I'll start from 2020 March until now. It's not really going up, it's not really going down, or maybe there is a bit of an uptrend, but the overall movement is horizontal, so it is in a horizontal trend. It seems like it's going to take a very long time for them to recover to the 20 Rand price point. One thing you might want to consider is probably because, or one factor could be that they're not getting as much rental income since the COVID happened. As you may know, most people are now working from home, and companies have downsized the office space because a lot of people are working at home. They don't need that much property. So that could be an impact on the revenues and growth. And I see this is a dividend stock, so they're not really trying to shoot out the lights in terms of share price growth. You're just going to get dividends from these guys. Yeah. I did an analysis on this very recently. I think it was over Voice as well. If you are looking for stock growth, I wouldn't invest in this. There's a lot more better opportunities out there. Can we have another property? Let's have a look at Redefine, just for comparison purposes. Maybe that might be a better opportunity for people looking for growth in the stock. So Redefine also is in a very similar situation. I do know that with Redefine, they had some debt issues leading up to COVID, and then COVID hit, and then the debt was just a big problem for them, and they had to sell off some assets. basically to balance out their balance sheet. And then while they were fixing that, they had another issue with a certain property. I can't remember where it was. Or with a property company they are basically in bed with in terms of books, where that company basically decided to do a U-turn on an agreement they had, basically putting Redefine at a financial risk in terms of their financial statements. This was around, let's see, I think this was around July last year, where it was making a very good recovery, and then they had that bit of a snag, and the share price dropped. But they are having gradual increase as compared to Growth Point, where their growth is not as much. I'll just zoom in so we can have a better look. But overall, in terms of where it was and where it is now, Redefine and Growth Point are basically in a similar position. But Redefine does seem to be making better growth. So we'll just do a stock growth calculation comparison to see from COVID dip until now what the share price movement looks like. So I'll start with Redefine. Their bottom was 1 Rand 38, and they're currently at 4 Rand 20.
That's really good.
So that's around 200% from there till now. And then we'll look at Growth Point actually. They reached a bottom of 9 Rand, but I don't know if I should consider this a bottom. Let me just have a look. I used what, 138, right? Yes. Okay, so we'll use that with the same metric. So 9 Rand 50 for Growth Point, and they're currently at 14 Rand 18.
That's a 50% return, right?
Around that, yes.
Yeah.
Yes.
Would it help to use compare feature on trading?
Sorry, what was that?
I'm saying, would it help to use that compare feature on TradingView so that you can have both charts on one?
Okay. Where is it? So this is Redefine.
I think Growth Point's got a better story to tell here long term.
Yeah.
Because a lot of their properties are overseas. I just read they've got a $3 billion or 3 billion euro property portfolio. And when considered, the downward trend of the rand, etc., the returns from Growth Point, it has to be a long-term story. It's not something that you're going to get your returns back to your 20 Rand levels anytime soon. But people will eventually go back to the office in some form. And it will be recovery. But yeah, you're looking at least a 3 to 5 year, plan there.
Yeah, I do hear that. So, like on my side, just looking at the previous years. So just clarify. So their portfolio, are they expanding or?
They've actually been. There was an offer that was made for the European assets for at least 30% of them. So they may be looking to, exit some of those positions right now, given, the uncertainty of, folks returning back to the office full scale like they used to.
Yeah.
So they may want to, but then that will be money that will be distributed to, shareholders eventually, if they're not going to be buying any more assets in South Africa. So there could be a short-term spike if they go with that offer, and because that money has to be, redistributed back.
Yeah. Okay, thanks for that. So yeah, so here's a comparison. So like I said, yeah, the two are very similar in terms of share price movements because it is the same industry. Obviously the orange is Redefine and the green is what you call this, Growth Point. So if you actually look at the cost, so Redefine was at like 1 rand something, and they are now sitting at where is that, 4 rand something. So they had more massive growth. So if you did buy at the dip on Redefine, you'd have made more in returns if you bought the dip compared if you bought the dip on Growth Point. And one thing we can also notice when we look at this comparison is that Redefine's share does fluctuate a lot more than Growth Point. And it could be to what Wilman was alluding to as well, that probably Growth Point has a lot more balance, so the consensus is much better because of their history and their portfolio size in terms of the balance sheet and assets and all that. But yeah, personally, I generally would diversify a portfolio.
Hi, Tez.
Yes. Yes.
Sorry, it's like here. Hi, guys. Yes. About the Growth Point, their portfolio, it's slightly diversified. It's not only office. You
Yes.
have just recently, they've just opened up a health facility in Tshwane, a surgical facility. And you have Cape Town as well, that facility in Cape Town, the waterfront, which
Yes.
obviously it actually geared towards tourism. Obviously, we have COVID at the moment, but as soon as more people are getting vaccinated and borders are open and things going back to normal, you should see the share price start to basically go up. But yes, I actually agree with Wilman. It's not going to be a short term. It needs to be a long-term play.
Yes, I agree with that as well. So yeah, I'm sorry if I gave the impression that they're only based in office. No, not at all. But the office portion of their portfolio has played a big impact. And I'll give you a typical example of my company. Right, we rent 2 buildings from Growth Point. One is the office, right? And the other one is basically just for parking facilities. When COVID hit, our company basically canceled the contract for the one building, and now you try and multiply that across the board and you try and see the impact that would have on their portfolio. Yes, they are diversified, but it did have some impact. And in terms of the long-term play, yes, it is all agreed that, yeah, it is a long-term play. But what we're looking at now is the opportunity cost of investing in Growth Point as compared to Redefine. And basically what we then had a look at was that at Growth Point's dip, right, where their dip and their rise only equated to around 50%, as compared to Redefine's, which amounted to 200%. And I agreed with Wilman that could be aligned to the size of their book compared to Redefine. They are much bigger, so the consensus on them will be, better, or it will be stronger. They're not going to have as much fluctuations as as Redefine. Very typical example I can use is Tesla and Nikola, or Tesla and NIO. The share prices are completely different, and Tesla has a much bigger book. You would expect the fluctuations to happen more towards NIO side, which have a smaller share price, a smaller book, and a lot more excitement on their side. So basically the same principle would apply on Growth Points. So if you are trying to invest in Growth Point, right, and you have Redefined on the side, You then look at the opportunity cost. You see the fluctuations. You see the past movements. Noting as well that these two share prices do move similar, right? And I was just getting into the point where Redefine fluctuates a lot more. I'm not sure if you can see the graphs on YouTube where you can actually see that.
Yes, I can see it.
Yes, where Redefine has more returns in terms of what you're buying the share price at and the potential that it could rise, So on that point, I was saying, in this situation, considering the big balance sheet that GrowthPoint has and the big growth potential that Redefine has in comparison of Redefine, the smart play would be to diversify between different property companies, where one can give you the benefit that the other one can't. Where GrowthPoint will give you more stability and Redefine will give you more growth potential.
Okay.
Yeah.
Okay. Point taken.
Yeah. So that was my point, actually, that I was trying to make.
Okay.
Yeah.
Okay.
But I do hear what you're saying, and I do agree 100%.
Okay. Cool.
Okay. So who requested GrowthPoint, actually? I want to ask if there's any questions from their side.
I did, yeah.
Oh, it was you. Oh, okay.
Yeah,
are you invested in GrowthPoint?
I used to, and I basically sold out before the COVID. Yeah, because before COVID, I could see the property market was not doing well.
Yeah.
And then we move out. Yeah.
How
But
long?
I'm actually looking into going in again.
Okay. How long were you invested in GrowthPoint before you pulled out?
About, probably, I would say 3 years.
Oh, did you make any returns?
Not much. Not much. I think it's probably, maybe I actually bought it at the peak.
Oh, okay.
Yeah, I think it was around, 19, 20 rand, around there.
Yeah.
Yeah.
What's interesting is that when looking at these two companies over 3 and 5 years, Redefine is down 65%, GrowthPoint is down 52% over 3 years and 44% over 5 years. So the recovery of Redefine, because the dip was steeper, would most likely have been better, obviously, and we've seen that number now that's proven to be true, because they had such a huge dip. Put differently, if you had put your money in GrowthPoint, you would have basically lost less money than if you were in Redefine.
Actually, yes, that's a very good way to look at it as well. Yeah, that's actually very true. Yeah, because if you had all your eggs in one basket on Redefine,
you'd be down 65% still, even at today's share price, right? So yeah,
let's try and have a look at their financials, because I think that's something we should also have insight on, in terms of the ratios, debt equity ratio and all that. I just want to see if they are aligned, or if one is off somewhat. So because I do know that what you call this, Redefine had debt issues. I'll just go to the basic trading view. Okay. So there isn't really that big of a difference in terms of the ratio. Although, yeah, Redefine is on the higher side as compared to Growth Point. Okay. Are there any other questions related to the property funds? Can we possibly throw in? Is there any other one we can throw in to see a comparison?
Yeah. Sorry. Yeah.
Sorry. Go ahead, Venda.
I was just gonna go for storage as well. It's the only storage company that I know.
It's the same one I was actually looking at right now. It's like, there's a growth one, 45% over 5 years. Let's talk about that.
Yeah. Yeah. So because I actually believe a lot in it, me being in what you call in e-commerce, right? So I think as more companies are going more e-commerce, they'll kind of like realize that they don't really have to spend so much in offices or whatever. So like, the first thing that Takealot did with whatever money they make is buy more and more warehouses to keep their stuff so that they have more stock. So it would only make sense that for the smaller players, we'd want to choose things like your storage because we live in complexes. There's not really much garages and stuff like that, so still need to store stuff. And beyond that, more companies that are also closing offices, or not business but offices due to COVID, also need to store their stuff somewhere. So it would make sense that they would use companies like storage. So kind of thing.
How do you spell that company?
Storage.
Oh, there's a dash.
STOR and then -age.
Okay.
Yeah, there's a hyphen. Yeah.
No wonder.
Yeah.
And this is
I don't see it.
What is the ticker? SSS.
Okay. Okay, there it is. Okay, so they're on a strong buy. They're on a strong buy, but I'm seeing these other graphs that over some time it's still very horizontal. And yeah, it's parallel compared to Redefine. They're actually on the uptrend as compared to them. And okay, I'll just remove the compare. So I should just look at it on its own. But yeah, like from 2016, they've been on a uptrend. The COVID dip happened, and it still seems very good in terms of growth. So let me see. Yeah, so I think around 17 September or around September time, it could possibly reach 16 Rand if all goes well. But it's looking so much better as compared to Redefine and Growth Point.
10.3% yield. Wow.
Yeah. It's how much percent from, this was from what? From 10 Rand to now. Okay, so.
Do you know anything about taxation with regards to REITs, Tiz?
No.
This would be added to income, right? And taxed accordingly.
Yeah, I think so. I was actually supposed to get a tax guy to help us with that.
Yeah, because I think REITs payouts are added to your income and taxed accordingly.
Yeah.
I don't know. I don't wish to speak out on this because I don't know much about it. But it would be interesting.
Yeah.
I'll do some research. I'll actually do some research on it. I do recall reading it, on the fly. But yeah, I'll find it.
Yeah, we'll just I'll try to find out as well. I'll probably ask my wife as well because she does my taxes, so I'll just confirm with her with regards to that. But I am planning to get someone who actually does tax, and then we can just bombard him with questions. Yeah. But that's a good question. I think we also got a bit confused on what was the previous tax question that they asked in the previous session. I think it had to do with I think what it was, the rebates for dividends. Yeah, something around those lines. But I suggest that we just get a professional to help us out with regards to that. Okay, let me just see what's the most common requested stock, and then we can move to that.
Well, we can. I want to say bitch and moan about dividend tax. You put in all the risk. We put in all the risk. But there you make a profit, or there the company pays you out, and the government is sure there to take their 20%. So, yeah. But on the losses, well, that's it.
Let me
You're on your own.
Let me actually have a quick look if I do have my varsity notes. If I can pull out something.
Maybe that's next week's discussion. Is we're talking tax and dividends and yes.
Okay, I don't have anything in my reach right now. Okay, I'd actually have to dig for them. Okay, so I think the one that was also requested a lot is DRD Gold. This is the one I like bantering on a lot.
So DRD Gold is 51% owned by Sibanye. So if you want exposure to DRD Gold, you might as well just buy.
You think we don't know what you're trying to do? We know what you're trying to do, Wilman.
I need that share price to go up.
Okay. I was invested in DRD Gold when they were doing their rally last year. But then I quickly jumped off because, like I said, mining stocks and me, we don't mix. Okay.
Yeah, you see, so the problem there is that it's directly, they're only, to the tail ends of gold. So if you want a more diversified mining company, it would have to be something like your Sibanyes or your Impalas and that, versus just the purely gold stock, what DRD Gold is.
Yeah. Just enlighten me, because I had a bit of a view. It was actually a pattern I noticed, which happened last year. So, like with the likes of DRD Gold, they were mostly driven up by the record prices of gold that were, shooting up,
Correct.
And then a pattern I noticed is that the moment it started going down, I don't know which event happened first. It could have been gold going down or cryptocurrency going up, but they had a very opposite movement. So I don't know if that is something we can consider. It does seem a bit far-fetched, but it is a pattern that I did notice. And I think I did read an article that, there's basically a different view on I can't call cryptocurrency mineral, but basically valuing a mineral where more value is being put on digital currency as compared to the physical one being gold. And if you actually look at the charts, so DRD gold, and I'm assuming the gold price also started going down around July, which is basically around the same time or like a month after Bitcoin had its halving event. Basically meaning you get less Bitcoin for mining it, and they had complete opposite movements. Do you think though the two correlate in a way?
I am not. I can't give you a view on that, but I would argue that you've got two different buyers into crypto versus that of gold.
That's correct.
Age does, play a factor there. Gold is always seen as the safe haven, and Bitcoin, if it halves now from the dollar or from the rate where it is now, where's that money going to flow into? It's most likely going to flow into gold. So, because it's seen as a safe haven, even though people may say gold is dead, we've been digging for gold for hundreds of years, and it's not going to stop until it's really finished.
Yeah.
So I don't know the correlation between the dips, and with the exception of obviously what we see in the price of gold, and how that correlates into share prices.
Let me actually try and put up the comparison. And see if it'll actually work. Yeah. Are you watching on YouTube? Or can you actually see the screen?
I am on YouTube, yeah.
Okay. So you see like what I mean? So they basically just intersected each other. So it actually didn't happen at this point. It actually happened around this, right? So look at the interesting thing here, right? Is generally, they were somewhat traveling the same, until this event here, and there was just this big gap, and then they just intersected each other. I don't know if it was at this point where people realize, this one is not working for me. Let me just.
Wait, wait. Are you?
Yes.
Wait. Is DRD Gold a company or the actual gold instrument? Is DRD Gold the company or just the gold instrument?
No, it's a company. It's the company.
No, it's a company. Oh, I thought you were comparing Bitcoin with AU.
Oh no. So yeah, what we're basically saying is that DRD Gold moved heavily in accordance to the gold price. And as the gold price dropped, so did the share price. So I was just using DRD Gold as basically a quick substitute for the actual gold price movement, although it is incorrect, but it was just a quick thing I wanted to do for illustration purposes.
Okay.
Yeah. But anyway, let's continue with we digress. Let's continue with the actual analysis. I did this one very recently as well. I can see my lines are still there. It did break this point. So this was one of the points I did note. Let's just have a look at my previous analysis I did on DRD Gold. Yeah, so it was struggling to recover beyond the 15 Rand price range. And it seems like it has gone above it right now. Or just very recently. I don't think it's anything to write home about at this point in time until we probably get another positive candlestick, and maybe we can be comfortable around, let's see, around the 16 Rand price range if it's sitting there comfortably. overall, it does seem like some form of rebound is happening at this price point. I'll just neglect that bit of a sneak, and I'll just draw another support line there, because I do see that there was some entertainment happening there. And as you can see, this entertainment here, there was also a bit of resistance there. So I think we can justify the support resistance line. So it is currently above 15 Rand. We should probably wait to see if it does go above 16 to confirm. And then we might consider this a change in the trend from the downtrend possibly going up. Considering the trajectory, it still could take some time, possibly after July. If everything goes well, we could be at 22 Rand again, but I highly doubt it. I think we're still going to continue along these lines for the time being, unless something spectacular happens with the gold commodity itself. I'll just have a look at
I'd say you need a global event, like I don't truly you'd need like a war or a hard lockdown in the US for that price to go up. I mean, they had a hell of a run to 28 Rand July last year. So yeah, and these are, or rather that was the period when there was, all those lockdowns worldwide.
Yeah.
So and then people obviously then tend to, go to gold as opposed to something like a Bitcoin.
Yeah.
So yeah, it's obviously highly cyclical, and loves it.
Wilman have a solution. Just bring back Trump. It will sort it out.
We miss Donald. We miss Donald in the stock market. That's the only reason. But yeah.
Yeah.
Sure, we sell our souls there. As long as you make money, that's yours, guys. It can't be that bad.
Yeah.
We're not
Okay. Okay.
Anyway.
I think we can leave it there for analysis, and I think we can probably just add some general talk from here before we close off. We've done a bit of analyzing. I'm getting fatigued, actually. Let me just see what's in the chats. If there are any questions, guys, you can just pop in anything. I'll start off on this random topic because someone just mentioned Trump. And it's Joe Biden and his extra tax. I don't know if you guys have heard of that, his new tax regime.
Yeah, I think I have.
Yeah, and
and it's causing a lot of sell-off in the market.
Is that a good or bad thing?
I mean, it's bad it's bad for if you are a short-term trader. Because I didn't see that coming. Literally this week, I didn't see across the board, especially on Monday and Tuesday, there was throughout the different sectors, a lot of the stocks were sold of the US stocks. So it's a good thing in a sense that yes, the share prices will be at a low price for people to go in, but that only really favors a lot of long-term investors.
Yeah.
If you are someone like myself, you trading during the week, you're trying to make money in the short term, sometimes that catches you off guard because you can't really plan for that. It's like immediate news, they just come.
Yeah.
A lot of the stocks, I remember, I think it was Spotify and Delta. They were oversold. Like their share prices had already dropped. So now you're coming into the trading week, you're thinking to yourself, okay, it's already oversold. It should probably start consolidating, going sideways or possibly up. Buyers should come on, and you plan according to that. And then news such as that comes out. I don't know. I don't know how to feel about it actually.
Can I ask Fred? Sorry. I just want to ask Fred, when you trade, do you only go long? Do you also make short trades?
So my trading style is I'm a swing trader. So I try and hold for a couple of days, preferably a week, just within a week. But sometimes I have had moments where I hold it for 2 weeks. Ideally not longer than 2 weeks. However, I don't day trade. I don't go in and out during the day. I find that that's my weakness, and I don't have much discipline to day trade. So when I look for entry points, I'm looking to hold them for at least 3 to 4 days. Yeah, and it's a lot of it is based on technical analysis. I try and focus a lot on technical analysis. I do consider a bit of obviously fundamental. But yeah, but it's like I was saying, like when Biden came out with that news, it's like when Trump, when was it? I think it was last year. He said something which sent the whole market down within like a few hours. Not sure if you guys remember. I think it was earlier this year, last year.
Was it when he said, what? Shithole countries? Africa is shithole countries or something like that?
I can't remember what he said.
No.
But he said something quite, I think he said it on Twitter actually. He made a tweet and then all the stocks just dropped, like literally across the board.
Sheesh.
Yeah. And I mean, those type of things you can't, as if let's just say you're in a trade and you're holding it for a week because you're trying to reach your target and it's going slowly reaching there, and then Biden comes with something like that. It's fine, but I mean, for long-term investors, but it's just not cool for us. I don't know what you guys feel about that. But also one thing I've noticed between Trump and Biden being in power is that stocks aren't as strong. Momentum to the upside aren't as strong with Biden in charge.
Yeah, that's a more democratic. The Democratic Party didn't come into power to try and make more people rich or the rich even richer, right? Their big ticket item was looking at infrastructure and social issues in the US, and you can only fund that through an increase in taxes. So in South Africa, we pay company tax of 28%. In the US, it's 21%. So all these tech stocks that do not pay tax, Biden has been quite vocal about it to say that they need to start paying their share. Ditto the rich people. The Trump came and gave them a hell of a lot of tax discounts in 2016, I think it was. And Biden's looking to claw some of that back to pay for the, big infrastructure projects that they want to do going forward. So maybe, Fred, you should be looking at infrastructure stocks going forward, and maybe you'll get some gains there. Maybe look at the PPC of the US and let's make some money there. There's always an upside. That's it.
Yeah,
that is actually true.
Actually, on that note, Wilman, you're actually right. And the one industry was actually solar, which I got invested in because he has been talking a lot about renewable energy. So I did play a focus on that. Unfortunately, I bought in late, and then that March crash happened. But I am still planning to hold for a very long time. And one of the companies that I did invest in, they did get some kind of contract approved by Biden to basically install this solar power infrastructure in a certain, is it a state? I'm not sure if it's a state or a town in a state. And during December, actually, the solar stocks were really booming on this news of Biden's plan to really push renewable energy. So that could be something or a certain industry that people could be looking to get invested in. And note as well that Tesla is also actually jumping in the space of renewable energy, especially with solar. So that could be something, or the payoff that you could be looking for.
Yeah.
Fred.
Oh, sorry, Michael. So, yeah, I'm definitely going to look into that because I didn't have a lot of on my watch list. I've got a list of 40 different stocks. Every week I try to look at the same stocks and they're in different industry, but I realized that I've got out of those 40, the tech is too I'm concentrated too much on tech. That makes sense.
Oh yeah.
Because obviously, typically in the last, I would say, year or two, tech has been one of the best performers in terms of the industries.
Yeah.
And I don't know if that's the next, if it's going to continue like that. Considering the world and everyone's starting to go back to work, there's more jobs being created again.
I mean, we are in the fourth industrial revolution, so if the focus is on tech and robotics, so it's kind of a no-brainer to have a majority invested in there. But obviously, you have to consider the risk as well. Just be aware of the risk. In case Terminator happens and the machines turn on us and then it's all over.
It's all
Oh, yeah, that's
Yeah,
true.
But look, tech is grow even further because banking industry is all going cloud and everything, and all of this is backed by some strong tech. We're talking about software as a service, infrastructure as a service, and a lot of that. So if the banks are leading that tech kind of drive, then it's only fair that most companies will try to keep up and lead and get it to there. And also, if we're talking EVs that can drive themselves, autonomous or whatever, we'll also need some fast internet services to run those kind of things. So pretty much there, even the South African government has announced that they want to go kind of like service architecture, like Amazon. Well, they're actually dreaming, but then we'll see.
Yeah. Yeah, when it comes to South Africa, that was actually one of my biggest motivations to leave, is that their growth rate is very slow, especially when it comes to implementing new technology and all that. And I decided to actually go overseas. And I actually wanted to bring this point. It actually slipped my mind when we were talking about Trump as well. The moment Trump lost and Biden came in, I immediately got an interest in the Asian markets because, Trump was causing a lot of havoc there. And my gamble was basically that Joe Biden reverses everything that Trump did. And this is in particular to Tencent and what you call this? The one he did recently, Xiaomi.
Xiaomi. Oh,
Yes.
Xiaomi. Okay.
Yes. So I invested in that. And they're all still tech, but obviously it's in a different territory actually. But it hasn't gone well so far, but it is a long-term goal. But yeah, Fred, you're not alone in terms of in terms of being heavily invested in tech. It's a majority of us.
And I think also you mentioned something about you having most of your portfolio in offshore. That is something I also place huge emphasis on. And no offense to any local company, South African company or African companies, but yeah, but it's like for me, what I'm looking at is if you're looking at a business, right, the sole purpose of companies is to make money, right? Now, if you compare the revenues these offshore companies are making, like US companies, compared to them to like a South African company. Let's just compare Walmart to maybe ShopRite. The revenues, there's a huge gap, right? And they're making revenue in USD. So my thought is these companies offshore have a bigger market share, right? They serve more people around the world. Whereas a ShopRite maybe just serves within Africa. I mean, I could be wrong. I don't know. Whereas Apple serves the whole world, So for me, I looking at it from that point of view. With the bigger the market share, these guys make more money because they able to get more money from more people around the world.
Correct.
That is why I personally have 90% of my portfolio invested in offshore. And then with regards to local, I literally just have PPE. I've got Naspers and what's the other one? And there's one ETF that I'm holding locally, but otherwise everything else is offshore.
I'm sorry, Fred.
Yeah.
Yeah. I don't know, guys. My opinion, I think sometimes we are quick to compare South African companies with American companies. If you look in terms of size, America is big, and then these companies have been like in operation for more than 50 years or 30 years. And then if you look at South African companies, most of the time you won't find a company that is more than 50 years listed on the JSE.
Yeah, that is correct. Yeah.
So I would prefer if we compare South Africa, maybe with countries like Singapore, Taiwan, those countries, not America. America is too big for us. I'm not saying like in terms of comparison. In terms of investment, yes, America is the place. They make the world go round. So America is the place. But in terms of comparison, I don't know.
Yeah. And also I think like, I would ask myself questions like, if COVID had to come around again, let's just say you invested in your future portfolio and COVID had come around again, would the companies that you are holding survive COVID in your portfolio? And that's the question I'm
That's a
asking
deep
myself
question.
now.
Eh?
It also depends in terms of operation, with area or industry they are actually operating. Because if COVID comes, obviously your retailers, some of your retailers like your ShopRite, your Pick n Pay, they will still do okay. Yes, they might not do well when when the environment is normal, but they will still survive because at the end of the day, we still need to eat.
But yeah, Lucky, I hear what you're saying. So I'll just explain from my point of view. So, when I talk about why I invested out of SA stocks and rather went for international stocks, yes, it is a comparison, and I feel like it is a fair one to make, considering it's the growth that you're actually chasing. And for me, what killed me was the opportunity cost. What am I losing out in the world staying invested in SA? And you see the growth that's happening overseas, and you see the rapid growth that's happening in other markets, and then you look internally at our social economic issues with our government and all that, and you compare the risk factors of staying invested in this country, rather than getting the better opportunity that lies overseas. And there's multiple factors that instantly come down and just push you to go overseas. We can look at the currency. We reached a scary point last year where the dollar the rand was 19 rand per dollar. Things like that. Whereas if you had kept your investment dollar denominated from the first point, you wouldn't have actually felt that, And then you look at the industry rate of growth, where we have barely grown, And I think that is, in the sense of your investments, I think that is quite a fair comparison to make, if you actually want to get the best returns possible out there. Not saying that the potential isn't in South African stocks. Yes, there is potential, but then we look at what the likelihood is of that potential actually blooming as compared to, you sitting outside. And if that potential does bloom, will it be worth losing what you could have gotten outside? So I think from the comparative point of view, that's how I actually looked at it. Yeah.
Yeah, it's pretty much like, look.
Yeah, I agree with you.
Yeah.
I agree with you.
Yeah.
If you look at in terms of currency, obviously the rand is actually, you'll never know what's going on with the rand. And you have the politics playing its role as well. What I'm actually talking, I'm not talking about in terms of growth, because when you're talking about growth, yes, opportunities are better, far more better in the US than in South Africa. I'm just talking about comparison in terms of companies, company size and operation. South Africa, we just basically, we are nowhere. We're nowhere. If you're actually going to compare South Africa with America in terms of operation companies, you just look at basically the blunders that have been made by a few companies here trying to go overseas, like your Woolies, it's just ridiculous.
All of you guys,
that's where I'm coming from.
All of you guys make really good points, and Lucky, you're absolutely correct with the blunders of South African companies. Hell's bells, even somebody like Shoprite. The biggest surprise for me on the Shoprite, if we're just talking South African companies that have an African reach, Shoprite pulling out of Nigeria was a big shock. I did not see that coming. I mean, Whitey Basson was a very good CEO when he was at Shoprite, and he punted Nigeria being equal to South Africa, or their operations in Nigeria being equal to South Africa within a 15-year period. Of course, the new CEO decided to pull out given the logistics issues of moving goods and services around Nigeria. So the fact that they've moved out over there is really sad, and I think they've closed off a window of opportunity there. They should have stayed a little bit longer. But then we've also seen somebody like an MTN as well, and the regulatory issues that they've run into in Nigeria. Africa is not easy, and you're dealing with governments in Africa. You're dealing with currency fluctuations. You're dealing with so many other factors that we can't control. So this is where one would say, okay, let's look at overseas and what else does the globe offer. If I've got this pot of money that I've built up, how do I then preserve that? Not only preserve, but grow it further. And then you've got to ask yourself, the real question is, am I going to be able to achieve the growth that I've achieved thus far, continuing in Africa, or do I need to diversify further out? Personally, I've not invested in one single US stock, only because I just find it too. I suppose it's maybe fear of not doing. There's just too many companies to pick out there. So I go with the ETF model. I go with the ETF model, and to Fred's point, if a company goes down, well, with the ETF, if the market goes down, then the market goes down, right? So then my losses would be less than if I were to put a whole lot of money in an individual company. So that's why I prefer to go the ETF route when investing overseas versus an individual company. I don't know, what's the views on that?
I agree with that, especially with the ETF. I have punted the S&P 500 as one of the go-to ones, where you can basically get the best possible steady growth And I think, who's this? What's this guy's name? Warren Buffett, on one of his interviews, they actually asked him that very same question, that, listen, most of the investors who are afraid to pick out stocks, what is the one stock they can invest in? And he actually said, no, just invest in the S&P 500 ETF, and everything will be good. So yeah, for those that are reluctant to pick stocks, there's always that, and there's obviously multiple other ETFs being pointed out, and it does obviously offer a lot more safety, and according to what I've seen, has always been on the positive in terms of overall trend. So yeah, like Wilman, your decision is not bad at all. But then there are some of us who do invest in that, but try and basically throw in a bit more growth. And the good thing with the US stock is that, or US stocks, is that they are those blue chips, which are basically the go-to stocks for everyone, including fund managers, and those are your big tech companies such as Apple, Microsoft. If you actually Google some of these fund fact sheets or investment portfolios, you will find that almost every fund manager has these blue chips in their portfolio. So people just, like on my side, I'd invest in those as well alongside the ETF, just to add a bit more percentage growth over the years.
Just a quick question, Tez.
Yes.
What's your view regarding the growth stocks when the US Fed starts hiking rates and they stop printing money? Would you consider going in slowly or still be aggressive?
So with me, I look very long term. Like my view is, when I'm 50 years old. So I don't really pay attention to the short term noise. A typical example was when I actually sent through that snip of my fuel cell by the dip. I just keep pumping funds in, especially with the US stocks. So I don't really pay attention to the short-term noise, unless there's World War III, then I'd be concerned. But as for the Fed printing and all that, I mean, they've been doing that, so I don't really pay attention to that. Yeah.
Okay, cool.
If World War III breaks out, you buy gold, guys. Just remember that. That's it. You won't go wrong with gold in war. You will never. Just remember that.
Yes, Fred.
Oh no, I was just trying to say, so my only not issue but concern with investing locally, whether it's South Africa or in Africa, is that there's a lot of political unrest, in the African continent. Now, I mean, it happens everywhere, but I feel like it's much more amongst here locally, and which has a huge influence in the markets, right? I mean, the level of corruption within government itself is a concerning for an investor. If you're trying to invest into a company like Eskom, for example, or let's just any energy company, that would probably be good. But if you're trying to invest into a company, you have to consider things like, will there be load shedding again, and how often? You have to consider things like, what is the actual, just the employment in the country, because the fact that there's high employment results into a lot of companies actually I wouldn't say abuse, but underpay people, you know, which is not morally right. But then that causes government to now also have deals with these companies where they should actually be how would I put this, be enforcing the law, but instead they would go and have deals with each other, and which ends up in corruption. My point I'm trying to really make here is there's too much political unrest for to hold, I don't know, just from my opinion, to hold the majority of your portfolio with, like, locally.
Yeah, we hear you. Yeah.
I don't know what you guys think about that, but if I'm making sense, or
Can I just ask you, Fred, possibly you can give clarity on this. What would convince you to basically come back and invest heavily locally?
I think it's what would convince me is the industry which the company is in. So, for example, I'm happy to. I mean, I'm a big favorite of tech companies, because I feel like compared to all industries, tech is the one industry that's integrated into all other industries, right? Whereas if you take, for example, tech company like what is this, Twitter, for example, right? And you take a tourism company. I'm not sure what. Let's just say ABC tourism company, right?
Airbnb.
That ABC company is more likely to use Twitter, whereas the employees or the staff of Twitter then less likely to go and travel with the ABC company or hold shares. So that's what I mean by I feel that tech is the one industry that's really integrated into all other industries. So for me, it would be tech companies. That's why I'm invested into Naspers, for example, because I think they can still grow at a decent rate regardless of how unstable the economy is or the political situation. Whereas other industries, like tourism, they're highly affected by what's happening within the country. So I think it's mainly just on the actual company.
Oh, okay. There is another very big tech company you left out that you could possibly consider investing in locally.
Which is?
EOH.
EOH.
Yeah.
Okay.
But do some heavy analysis before you jump in there. You know, apparently government did get to them, so just make sure that they're clear of that.
I think EOH has gone through the worst, and they've got a good guy in charge there, and I think they're settling a lot of their fines with Microsoft and with government, and all the overcharging that they've done. So if we have to look at what is a comparison company, something like
Steinhoff.
Adapt IT.
Oh, sorry.
No, we're talking IT.
Industry.
We're talking IT.
Okay. I thought you were talking about corruption.
No. Well, we're talking corruption, yes, but if you're talking about like IT companies, right, in the same space, IT consulting, etc. So they've come back from the doldrums as well, right? So I see potentially some good growth coming out of EOH, and also because they also do derive quite a huge chunk of their income outside of South Africa as well. So Fred, I would say look at, if you were ever to come back to South Africa, to sort of mitigate your risk is to look at rand hedge companies. What companies, even though maybe SA decimiled, would still give you that benefit of being rand hedged and protecting your investment somewhat. So something like, for example, Sasol. Sasol's not so much dependent on the politics of South Africa. People will need to buy fuel. and that fuel is priced it was priced in dollars. So as long as the dollar price of the of the fuel remains stable, etc., you'll get a good return on that investment, provided Sasol doesn't do stupid things like go and build another $13 billion plant somewhere where they should never have gone in the first place. But so your rand hedge stocks are the ones that you should really look out for. Your Naspers, your some of your mining stocks, your Anglos, etc. I think those will sort of protect some of those risks that you are, alluding to. So yeah, that's just my view.
Cool. Did you guys catch that run on Sasol last year?
I was at the forefront.
Fred, catching a falling knife. I went in at 200 Rand and then I went in when it went down to 180. By the time it went down to 100, I was like, I'm done. It went down to 25 and I had heart attack. So I said, that is it. I waited until I averaged out eventually, I think, at 130. And when it got back to that 136 level, I sold out. I'd put in way too much. It was a terrible lesson for me. And, yeah, I took it as a lesson learned, and that's it. I'm not going back to Sasol, but yeah.
You caught the falling knife.
Yo, dude. When you got 6 figures on a falling knife, it's you're like, gee whiz, what have I done here?
Yeah.
No way.
I managed to catch it on the way up. I think at 32. That's when I started buying in, and then when I say I was at the forefront, if you actually go to my Twitter and go back then, you'll actually see all my tweets, and everyone was that's where people actually started following me, because I was actually sending out analysis on Sasol, and they were coming out quite accurate until it peaked at 172, I think. And then it dropped down to around 140, and then for like a good 2 months it was just fluctuating around that that price range, and it became too difficult to analyze, and then I just pulled out of it. I was like, you know what, I've made my money, let me dip. So
I recall there was a tweet where you were waiting for it to get to 120 and you were going to go in again.
No. But what I actually did capitalize on was crude oil. When it was falling, I shorted it all the way to the bottom, and I made some really good funds. And then as soon as I made those funds, I withdrew and I stopped, because you know how easy it is, especially if you're trading CFDs. It can easily turn into gambling, and then you lose all your returns, and it's over. So I think that's where I made the most on crude oil.
Good for you. Send some of the profits this way.
Gentlemen, I think I have to leave, but thank you so much for the chat.
No problem.
Yeah, I'll try and actually put on my Telegram notifications.
No problem.
I joined late. Yeah.
Okay, no, but everything was recorded. I think we can end it. I think we probably did a 3-hour session, if I'm not mistaken. Almost 2 hours 43 minutes. I think we can close it off here. I'll probably just snip this up for the rest of the people, so they won't have to watch the whole deliberation we had. But yeah, I think we can close it here. Thank you so much, guys.
Awesome. Cheers, gents. Thank you so much.
Cheers, and thank you.
Thanks, guys.
Hopefully, by next week, we will have our tax expert, and then we can dive into more of the personal finance topics, especially with the tax aspect of it. I'll try and find him and hopefully midweek next week we should have another session. Okay, guys, thank you so much for tuning in. Hope you guys enjoy the rest of your weekend. Let me go get some nice whiskey and go to sleep.
Night all. Cheers.
Thanks, guys. Cheers.
Cheers.